Great. Thank you, Shauna. Welcome, everybody. We're excited today. We have Nicole Johnson from Hafer, and we're going to be talking about all your audit questions. We're going to try to get rid of all the mystery and confusion that surround audits. And as always, we're going to make accounting fun. Yay, I'm excited. So for those of you that don't know me, I'm Fiona DiDomenico, Regional President with Castle Group. For those of you that may not be familiar with Castle, we are Florida based and we focus on associations, whether they're condominiums or HOAs, where we can place a team on site. And a lot of our associations have a lot of amenities. So whether that be, tons of pickleball courts or big facilities where we do lots of fun lifestyle events. Some of our associations don't have any amenities, and that's okay. But that's basically where our sweet spot lies. And Nicole, we are excited to be partnering with you today to kind of walk through with everybody that is registered. I understand you have a presentation you're going to share on the screen, and you're going to kind of walk us through the audit process. And we've received a whole bunch of questions that have come through from the participants that have joined us today. So I will try to watch that list as they come up and interject as we go.
Wonderful. I'm excited. I know that the audit and accounting process, everybody thinks it's not exciting. So I will definitely try to make it as best as possible. And like I said, hopefully we get some good questions. Don't hesitate to ask anything. We're going to kind of make this interactive. So Fiona will be asking throughout the process questions or things she'll bring up as I do the presentation. The presentation, I will make it available to everybody. I know Castle will too. I'm going to share my screen so I can bring the presentation in. Okay. So today we're going to talk about the year-end external reporting and what you can expect in an audit. Auditing in general, when you're a board member, it can be overwhelming. Especially being a board member coming on, if you're new, you've never been through the process, and you're required to have an audit, you might not know what to expect, and that's normal. And what you should be doing is communicating with your management company, communicating with your auditor to get an understanding of what's happening. There are too many people that'll go through the audit process and not understand it. And you are required as a board member to sign off on the audit. So if you're signing off on something, I would make sure I know what I'm signing off on. Having a closing meeting with the auditor, talking to the auditor. There are too many times that I'll pick up a new client and they'll say, I never met my auditor in the past. And I'm like,
Nicole, that happens all the time when
you
I'm
hear that?
working with associations, both new associations and some of our current ones. We're always encouraging our associations, right? You as the auditor of the CPA firm, you're the partner with the association.
Yes.
Castle is one of their partners, but you as the auditor is another partner. And so what I hear you saying is that you're happy to engage, with the board to kind of make sure that you've answered questions and clear up any confusion they have on their specific audit. Is that correct?
Yes. And I love that you say that because the other side of it is the board is responsible for the audit. So if the auditor is only talking to the management company, that concerns me. The auditor should be speaking with the management company, the board of directors. So they should all be involved. So like when somebody will call me to get a proposal and they say, I don't even know who my auditor was, that scares me because I
Yeah.
say, why aren't they communicating? So we will be talking about all this today and what your obligation is. So accountants are not funny, but I tried to lighten it up a little bit to try to get the thing started. So how did the auditor propose to his girlfriend? With an engagement letter. So you are
Very cute.
required to have an engagement letter. One thing that Castle is very good about, and all of their managers, I don't know if they put it into their handbook, but all their managers reach out during the year and say, we need to make sure we have an engagement letter for next year. And they
Yeah.
do this before year end.
What we do, Nicole, is we have a massive tracking that Brian Street, who's our EVP at our home office, tracks.
Okay.
And it lists every association that Castle has and do we have their engagement letter? And if we don't, why not? And we literally follow up to make sure because it's very important, we feel, to have that engagement letter up front, to know who the auditor is going to be, to communicate with the auditor ahead of time so that we're ahead of the game, not behind the game.
Exactly. And you guys do a great job of that. So I love to know that you have a master list, especially in the industry right now. There's not enough firms to do the work. So you want to make sure you're getting in with a firm ahead of time so you get on their list to get done early. Auditor, someone who does precision guesswork based on unreliable data provided by those of questionable knowledge. And I say that to be funny is because there's so many times that we'll have people on the board that don't have a financial understanding. And that's okay. We're not saying that you can't be a board member, but what's important is that you stay in touch with the auditor because they're going to be asking you questions throughout the audit, and you want to make sure that you have the knowledge. Even though you don't know how to do a financial statement, you still have to understand what's going on in the books. You can't just rely on your manager, your accountant. You want to make sure that you have an understanding.
And typically, Nicole, do you find that you have, mostly either the treasurer or the president who you are communicating with as the auditor, as opposed to, all five board members each reaching out to you individually and asking you the same question?
Yes. So great question. The main thing is exactly what you're saying. We can't really have all the board members because then it needs to be a meeting. So then all the unit owners would have to be involved, which we don't want to do that because it's the audit process. So it's usually the president and treasurer. Sometimes they'll say, well, let's have the vice president or secretary, but I always want the treasurer. The treasurer is the one that's in charge of the financial. So great question. Yes, it's mostly the president and the treasurer. Why are auditors mean? Because we live in an accrual world. So accrual, everybody knows that we have to accrue certain things at year end and make sure that it's done on an accrual basis. The state of Florida does require associations to be on an accrual based accounting. That doesn't mean that it has to be done monthly, but it should be. But at year end, it must be done on an accrual basis. Castle does their books every month on their financials on an accrual base. They actually follow GAAP, generally accepted accounting principles, which is very important. An auditor coming in where they don't have the books on generally accepted accounting principles really can't do an audit because their job is not to do the bookkeeping. So Castle does that monthly. You're not supposed to be on a cash basis. What do you call a trial balance that doesn't balance? A very late night. So for us, we always have to have the trial balance, of course. An accountant always has to balance. Very important. So what is an audit? So when someone says to me, I'll hear this all the time. Well, you're doing the audit and you're finding fraud. No. I'm right. Fiona, I'm sure you
I
hear.
hope not.
Right, exactly. They think that the auditor's job is to do that. So the first thing is that's really a forensic audit. And I'm going to talk a little bit of that down the road because everybody's calling now and asking for forensic audits. Forensic is if you find fraud, it turns into a forensic. Most of the time when people call me, it's really not fraud. It's either mismanagement or a board made a decision to hire somebody that was a more costly vendor, which they're allowed to do. That's not fraud. So people need to be careful using that word. You never accuse people of fraud till it's ever proven in a court of law. So I make sure people I tell that to. Just because a board makes maybe a bad decision and you think it's a bad decision doesn't institute fraud. So an audit is a systematic examination and verification of an organization's financial records. So basically what we're doing, to tell you in layman's terms, an auditor is coming in, looking at your financial statements. They are going through bank statements. They are going through your minutes, your contracts, and they are verifying that everything that you're doing actually is done in accordance with generally accepted accounting principles and making sure that they are associations expenses. So for example, they're going to go through your reserves. Did you have a reserve study done? And it's also in compliance with statutes. So a lot of these audits are called compliance audits. They're all certified because that's a big question that comes up. Are they all certified audits? Every audit is certified. So they're making sure that you're in compliance with statutes and your governing documents. So the auditor is asking for everything. They're going through your minutes. We're actually reading every single minute that you put together. So make sure that when you're doing your minutes, that everything's in there, everything you voted on, everything that you've transferred, you've done, because we are relying on that and tying that back to actual transactions in your financials. One thing an auditor cannot ask more of a blessing is that we have the ability to see everything. So one thing we were talking earlier, me and Fiona, is Castle gives you the ability to log in and look at anything you want. And to us as auditors, that gives us more of a comfort level because of the fact I don't have to rely on somebody giving me something. Somebody could alter something. Somebody could send it through an email and it's not right. When I can log into their systems and see everything, I feel more comfortable as the auditor.
And Nicole, I can kind of share with the audience a little bit what it
Yes.
looks like from our side of things. So we talked about, right, getting the engagement letter up front. And then typically what happens, a lot of times there's confusion even over the December financial, right? So a lot of times clients will say to me, well, can't Castle does our financial, can't they do our audit? So you've covered that, right? It has to be
Yes.
separate party, CPA firm.
Correct.
And we will produce the December financial. Once the engagement letter is signed, we send that to you. That kind of starts the process. Typically, then the auditor would send, oh my gosh, is it a CLA client's letter where there's a whole bunch of questions that they have for the property
Yes.
manager typically? We
Yes.
go through that internally and we decide, okay, out of those questions, which ones are accounting questions and
Correct.
which ones are the property manager. And most of my boards are shocked when we explain to them that the majority of those questions are not accounting questions.
They're
They're
not.
actually for the manager because they're asking about the business of the association. How
Correct.
has the association been running? So those are questions that the manager would answer. And then from there, as Nicole said, we give access, right, to all of Castle's systems just for that association, so that the auditor can then, for those of you that are on the call that are Castle clients, we have Castle Click, for example. Your auditor would be logging into Castle Click, and they'd be able to pull the information themselves. So there's it's a disinterested third party essentially is how
Correct.
we like to explain it. We do have a question that's come in from the
Yeah.
audience, and they're asking, should the audit process include a review of at least a sample of invoices to ensure agreement with booked expenses?
Great question. Absolutely. So the auditor is going in and testing. That's absolutely the question. So they're not looking at everything. Everything, if you're asked to look at everything, that's a forensic audit. They are actually looking at every single piece of information. On regular audit, they're going in and they're sampling. So there's something called materiality in an audit. So let's say your revenues are $1 million and your materiality on that's $10,000. So an auditor's obligation would be anything over 10,000, they can sample. So they would go in and sample certain things. Where is the risk area? So reimbursements, credit cards, things that are high risk, they might look at those areas and sample. The other thing is auditors need to be aware of, and board members, is not everybody, let's say somebody's going to commit fraud. They're not going to cut themselves a check for $10,000. So you also have to look at that and say materiality, yes, but I'm also going to look at the areas that are risk. So if something's in a credit card and it's under 10,000, I might still sample that area. So it really depends on the auditor's feel. Every auditing firm is different. They might say that's not a high area risk. So it depends on which audit firm you're working with. It's not standard, like you have to test this area or don't test this area. And one thing that we like is the systems that we can go in and pull any invoice we want. So with Castle systems, I can go into Castle Click and say, I want to pull this invoices or this, and all the receipts are there. Very important. If an auditor goes in and cannot see access to invoices, that's a problem. There could be an issue that you're not going to get opinion on the audit. That's called a disclaimer. We're going to talk about that later in the presentation. External audits must be done by CPA firms. So what Fiona was talking about earlier, an auditor has to be independent. So an auditor can have no affiliation with the management company, the board, or the association. They're coming in and giving you an independent opinion. Very
So
important.
there's a question on that. So just maybe a little
Yes.
more clarity. It said, did you say the auditor should be different than the CPA? I think what they heard is it's not the same as the management company, but will you
Right. So
just
the
clarify that?
management, yes, the management company has to be separate from the auditor. The auditor works for the CPA firm. The CPA firm does the audit. They have no affiliation with the management company or the association. It must be separate. Good questions that you're asking. Steps in an audit. So how does an audit start? First is the planning, okay? Determine the scope of the audit. So you're going to look at this area and you're going to say, okay, this is an association. Where are my risk areas? What am I going to do to audit this? And it's basically the beginning process. When I get your December financial statements, I go through all that and say, where am I going to start? Then I'm going to identify those risks. So there's something called an AU 260 letter. I am sure all of you have seen it. I am sure Castle has seen it. When it first came out a few years ago, I actually had a meeting with Craig, one of the owners of Castle, and explained it to him. It can be very scary. The letter is a preliminary audit letter, and it tells the board all the risk areas. It doesn't mean that this is going on. So when people first read it, they say, oh my God, there's
Right.
fraud going on. No. So it tells you this is what we're going to look at. Our job is to tell you, the management company and the board, where we're going to identify those risks. So don't get scared of that letter. It's a preliminary letter. Then we develop an audit program. Where's our audit scope? What's our limitations? Where are we going to sample? And we start developing this and getting ideas of what we're going to audit. And then we schedule. So a lot of times there are some auditing firms that never interview the board. So Fiona had brought up about the list of questions. In our audit process, we actually speak to the board of directors. I will never issue an audit if a board member will not speak to me. My concern is, why won't you speak to me? You should be able, if you can't answer the question, that's okay. We'll interview the property manager, but you should always be interviewed by the auditor. You're the board of governance. So we schedule an audit interview and we go through a list of questions, internal control questions, things that you should be aware of. Now, Castle does a great job of already letting the auditors know ahead of time. They have these thing called a Castle CPA kickoff party, and they go through their internal controls. So we're already aware of Castle's internal controls. What we want to make sure of, nobody on site is circumventing those controls. And it can happen. A board member could come in and say to the property manager, you know what, I need this check cut right now. Cut me a check on site. There shouldn't be checks on site, but sometimes the board will try
Thank
to.
you.
Exactly. I know Castle doesn't do that, but there are many that do. And the
Oh,
board will say, do it. And the property manager is taking direction from the board and they do what the board advises. And that can be a problem. So our job as the auditor is to understand those risks, internal control problems, and then we write a letter on it. We give you an internal control letter. And then there's an entrance conference. So basically we do an initial interview with the board, let them know where we're going, when the audit's going to start, and how our process is. Then we do our field work. Field work is what someone had brought up in your question. We're doing sampling, we're looking at the minutes, we're going through the bank statements, we're testing everything. Not every invoice, but what we feel we need to sample. And then we
yeah.
do the audit procedure. We actually do all the interviews. We do all our audit work. We test everything. We go through signatures. We go through invoices. Are these legitimate invoices? There's a lot of work involved in the actual work process. And then we're analyzing and interpreting it. Do we think this is legitimate? We're asking questions. We're sending a list of open items to the property managers that they're probably overwhelmed. There's this list of 15 questions that they have to
Yeah.
bring to us.
And I
Um,
think the board members, we have a question here. I think maybe you can speak to it a little bit. They're asking about liability. What is my liability as a board member since I'm not the president or the treasurer? They say I have to trust that the monthly financials are correct, and I found small errors which were corrected and didn't change the assets or the liabilities. So can you just kind of speak to that a little bit as far as, we are from a management standpoint very engaged typically with the president and with the treasurer who are
yes.
very familiar with the financials, but I can appreciate this board member sort of saying, hey, wait a minute, like where do I fall in this?
Yeah. And that's an excellent question. I would be the same way if I was getting onto the board. Where's my liability? So first thing is liability for any board member. You are not personally liable if you're doing everything with good intention. If you are relying on that you feel everything is correct and the president and treasurer are advising you, you're looking at the financials, they're telling you that you're not any liable. The liability comes in if you're actually doing something. You're getting a payment under the table. You're committing fraud. That's when there's liability. If you're doing everything based on good business judgment rule and you feel you've done up, you don't have any liability. So I think a lot of times because of these new laws that came out, and I'm sure everyone's aware of it, holding board members personally, That is if you're committing something, you're doing something wrong. If you're doing everything that you feel is correct, you're not going to have a liability. So I wouldn't be, and also when you sign off on the audit, I cannot stress this enough. You are signing off to your best of your knowledge. If you don't believe anything is going on and you sign off, you're not liable because you're signing it to the best of your knowledge. And that was a great question because there's a lot of board members I work with that they're concerned on signing off the audit if they're the new board. And they're saying, well, I
Right.
don't know what the other board did. And I'm like, you're signing off on behalf of the association, not personally liable.
Great
That
point.
answered that question. Okay. So then we issue a draft. The draft is the beginning stages. I cannot encourage you enough to read the audit. And the reason I say that is I'll send out an audit and an hour later they approve it. I know they haven't read it, right, Fiona? I know they
That's pretty
haven't read
quick.
it. It's pretty quick. And I'm like, I know they haven't read it and that we've taken a lot of time to prepare this. The reason I say that is we're writing the footnotes and you're signing off that you accept them. There might be something in those footnotes that's not correct because we're getting the information and interpreting it. What if I interpreted something wrong? Please make sure you read it before you sign off. Then I would encourage a meeting with the auditor. We offer that to all of our associations that once the draft is finished, if you want to have a closing meeting, do a Zoom call in person, we'll go over the audit with you. We'll answer all your questions. Now, there's a lot of board members that prefer asking questions through email. That's great. Send me a list of questions. That's what we're there to do. I had picked up a client a few weeks ago and they said, last year we asked the auditor and he said, we don't answer questions on the audit. Okay, if that's answered to you, I wouldn't be with the firm because
Right. Yeah,
that's
I
theirs.
agree.
They
Yeah,
should be there
for
for
sure.
you. You're the
Yeah,
client.
and I think my experience with boards is that even managers sometimes they can be a little intimidated by the audit because it looks different than the monthly financial, but that's why we encourage, right, to do that call or to send the questions
Yes,
because once you've gone through it a couple of times, I promise you it becomes much more it's just much easier. We have
it
a couple
is.
of questions that came
Great.
in. One of them is a question about how long can a yearly audit be delayed? Do you want to kind of speak to that a little bit?
Great question. So a few things so everybody's aware of the new laws that have put into place the SIRS and all the new changes. There's not enough CPA firms to do the work in Florida. So I'm sure everybody's aware of it. We have a waiting list, most firms do. Make sure the engagement letter is to them before year end. The next thing is talk to the auditors and say, when do you plan to put us in? Most firms say when December is closed, you get it to us, it's first in, first out. So I would be getting the auditor your December package by the first week of February. If you get them the first week of February, now January is too soon because all the accruals are not in there, the bank statements haven't been reconciled. Get it to them the beginning of February. And when you send it to them, give them a deadline. Tell them, I need it by March 31st. I need it by this date. And then they will come back to you and say, we're able to do that. Remember the other thing. If you give them a deadline and they send an open list to you, that open list must be fulfilled quickly because there's a lot of audits that have to get out the door. And like, I'll give you an example. Last year, I had an audit that they wanted it by March 31st. I said, no problem. I sent them the open list by the middle of February. They did not reply to me, and I was emailing over and over until October.
Oh my gosh, yeah.
So I can't help with the deadline
Right.
if you don't get me the work. So that's the
Yeah.
offset is making sure that you stay in contact and you get the work.
I
So
think it's a great point, Nicole. It goes both ways, right? So
correct.
we like to have that clarity from a field operations standpoint as well. Agreement with the auditor that once we get their questions, within a certain amount of time, we will respond so that it's clear. And I think that helps you as the auditor then figure out, okay, you're going to put that file down, you're going to move to something else. When are the questions going to come back? So again, it's just good
Exactly.
communication back and forth because it can take some time from the manager's end of things to,
Of course.
compile and research and get the questions answered.
Your managers are very busy. So I know it takes time. The other side of it is from your perspective, your managers get back to us quickly, but we also have access to CastleClick and GenArc. So the questions are much more minimal because we
Yeah.
can get everything. Associations that don't have that and that aren't paperless, the list can be 30 to 40 items and it can be very overwhelming to the manager. So I agree with you. And then once the meeting is taken place and all the changes have been made, the final is issued. And that is what is given to the ownership. You never want to give out to the owners the draft report. I can't stress that enough because there might be changes. You want to make sure the final is given. And I know Castle does that. Castle makes the audit final and available to the owners, not any of the draft. It's very important.
Correct. We have
Um,
a question about adjustments. It says how and why adjustments are made. Can you kind of speak to that a
sure.
little bit as you're going through the draft and then you get to the
Yes.
final, there's going to be some adjustments that come.
I love the questions everybody's asking. They're really good questions. So when an auditor comes in, an auditor is always going to find something, right? Of course. So it's good to have minimal adjusting entries, but there's always going to be some. So for example, a really big one is depreciation. So associations that purchase certain assets. So let's say they purchase gym equipment and they put it in the operating. Well, gym equipment gets capitalized. So what'll happen is we will make an adjustment to put the assets on the books instead of expensing them, and then we put in the depreciation. So that's an adjusting entry. Sometimes with special assessments, a special assessment is passed, but you didn't spend it all. We make an adjustment to put some of that money on the balance sheet to defer the revenue. So what an adjusting entry does is it makes it in compliance with generally accepted accounting principles. And everybody in associations will always have some adjustments because there's certain things that have to be in compliance with GAAP. So if you see adjusting entries, doesn't mean there's a problem. If you see 60 of them, then yes, there's a problem. That's rare, but I would be
Yeah,
questioning if that was happening. But
right.
that's just common sense, common in an audit.
Very good. Okay. We have another clarifying question, I think, again, about the auditor being independent of your general CPA. Perhaps, I don't know if this person maybe is self-managed. I know some of the self-managed communities might use, um, a general accountant to do their monthly bookkeeping. Do you want to speak to that a little bit?
Sure. So if you have somebody coming in and doing your monthly bookkeeping, so they're a CPA firm and they're doing your adjustments and they're giving your financials monthly, they do not have the ability to do your audit at year end. The reason why is think about it from a common sense standpoint. They're doing your bookkeeping. They're also auditing their own work. So they're looking at their own work and giving you an opinion on their work. That's not independence. So when somebody does your bookkeeping or your monthly financials, even if it's a CPA firm, they don't have the ability to do the audit at year end. That must be separate. I've seen where I've heard there are firms that do that. I don't know how they pass peer review. Peer review is a CPA firm that performs audits that are members of the American Institute of Certified Public Accountants have to get audited. So I get audited every 3 years. And they come in, and if I am doing any type of bookkeeping, we wouldn't pass our peer review. So it's very important. Also, make sure your auditors are getting peer reviews. It's very important. That means that they're abiding by all the auditing standards. Very important.
Perfect.
It's one of the
Yeah,
questions you should ask when you interview an auditor.
great explanation. Thank you.
You're welcome. What is internal control in an audit? Very, very important. So first thing is when we come in and we evaluate your internal controls and we give you an internal control letter after the audit's done, we are not giving you an opinion on the internal controls. We are not auditing the internal controls. We are just giving you recommendations. It's very important to know the difference. People think we're auditing that. No, we're evaluating it. So we're saying, okay, are you safeguarding your assets? Are you making sure that all the board members are looking at the invoices or the president and treasurer? Who's signing the checks? Do you have electronic signatures? If you do they have separate passwords? Who's approving the invoices versus cutting the checks? Do you accept cash? These are the kind of things that I know. I love your answer there, Fiona.
No
Auditors do
cash,
not,
no cash.
none. It was interesting. I did an audit and I was on site. This was many years ago. And they had said to me, I was interviewing the board. They said, we do not accept cash. I said, that's great. The guy walks in with a bundle of cash to pay his assessments. And he said, oh, this never happens. And I said, of course, it's the only day that the auditor's there. Um, the reason for that is you don't want access to cash. Everything today is so electronic based and paperless. You can do ACH, you can do payments that are automatically going into your bank account, and there's less risk. So these are the things we're looking at, the overall objectives, and are those goals met? So we interview the board and we ask these internal control questions, then we go back and test it. So if they tell me there's two signatures on every check, I'm going to go check that. I'm going to look at the bank statements. They tell me there's no cash advances on the credit cards. I'm going to go look at those statements and verify it. So everything that's being told to us, we're going back and verifying. That is the essential essence of an audit and evaluating those internal controls. And we must evaluate internal controls. Every audit must give an AU 265 letter. If you had an audit done, you want to go back and make sure you got that. That is a report on internal controls. It might be empty. It might say you have no problems, but it is required to be issued. And then we also make sure you're in compliance with all laws, regulations, contracts. So one of the things that a lot of the associations get upset about, but I want to make this clear. Let's say there's a due to, due from on the books. Everyone hates those where the reserves owes the operating or vice versa. It happens all the time. A check is cut out of the wrong bank account or so. It doesn't mean there's fraud. It's never fraud in my case that I've seen. It's just a miscoding. But if the reserves is owed, it's potentially a violation of statutes because you can't use reserve money for its unintended purpose. So boards will get upset with that language. What I say to them is, let's correct it. So correct it in the current year, and then we can put in the audit, this has been corrected in 2025. And then the association knows, okay, something was miscoded, but we corrected it. So you can that can be done in the audit, so that letter doesn't go out saying there's a potential violation. Um, some internal
There's a
control. Go right ahead.
Sorry, there's another question that kind of
Sure.
ties in. They're asking about gap standards, what we should know about, and what are the most common issues with audits. It sounds like you just touched on a couple. Is there any others you wanted to point out?
Of course. So the biggest issues that we see in association auditing is um, really is the internal control areas. So what we see is there's a lot of lack of controls, especially in the self-managed arena, if you don't have the proper people in place. We're not saying you have to go out and hire 10 people, but you should have segregation of duties. So for example, your management company, Castle, they'll have a bookkeeper handling everything. The board members sign off on the checks, they sign off on the invoices, the property manager codes them. Segregation of duties. There's enough eyes looking at that that is less likely there's fraud. Doesn't mean it can't happen, but there's less likely.
It's one of the questions we get from time to time is they'll say, well, we only want one approver and we require per our contract for that exact reason, right? There's always my mom used to say, a method to the madness here.
There is.
And board members are like, well, we accept cash and we want to have checks on site and we want to run everything through the credit card. It's like,
Yes.
those are, again, there's a method to the madness, right? You have to trust the professionals that there's a best way to do things. And all of these things help make the association more secure overall.
What Castle's doing when you're saying that is you're protecting the association's assets. Exactly. In the sense that, okay, credit cards, you have to think about that. They're risk areas. So we had an association where a board member, they were doing carpeting in the building, and the board member said, okay, I'm going to put everything on my credit card. You just reimburse me. So this was a self-managed community, and they said there was no problem with that. I said, when I came in to do the audit, can I see his credit card? Well, no, it's his credit card. I said, did he get points?
Yeah.
Yes. Okay, there's a problem. So these are the things that the auditor and your management company is protecting you from, that they're protecting the association from less likely to have a problem. Some of the other areas that are audit risk that we see is the reserves. That is one of the biggest areas of non-compliance, the reserves and the budget. So in condo world, they're not doing the budget correctly. So they're putting it out and they're not putting the correct language on it. They're not getting the waiving of reserves from the membership when they're not fully funding the reserves. So that's a violation of statutes. When's the last time they had a reserve study done? How do they know they're fully funding? These are the areas that we see that are the highest risk and where we see the issues in issuing an audit. So they're really the areas that we kind of concentrate on, because remember, it is an audit, but it's also a compliance audit. So you need to be in compliance with Florida statutes and your documents. Um, some of the areas that we see in internal control that are mistakes are: internal control starts with a strong set of policies and procedures. Internal control starts from a control environment. That means tone at the top. Your board members are ultimately the ones that give that tone to everybody of how our internal controls are going to be. Um, Also, internal controls. Oh, we have internal control. We have internal auditors. No, if you have a CPA on the board, that's wonderful, but they're not your auditors. You want to make sure that you're having an independent firm come in and audit those books, that you're in compliance with statutes. Um, I'm gonna go past. Internal controls cannot ensure success. I cannot stress this enough, in the sense that bad decisions. If there's bad decisions, I don't care all the internal controls you have in place, it will override that. A poor manager. The manager doesn't know statutes. The manager doesn't know that you are in compliance. He lets the board do whatever he wants, even though he's taken direction from the board. If I was a manager and I had my license on the line, I would make sure if a board was doing something, it was in writing that I didn't agree with it. Unethical behavior. I have to tell you, this is an interesting story. When I first moved to Florida 21 years ago, I was at a board meeting and somebody said to me, "Do you like this industry?" I said, "Yeah, it's great." They said, Florida's the second chance state. Had no idea what they meant. After I did about 15 cases of fraud, I said, I understand what's going on. So it happens all over. And the
Yeah.
problem in Florida is, Fiona, and I'm sure you see this, is too many board members are afraid to prosecute because they say, how did I not see it? It's not your
Hmm.
fault as a board member. If something happens, those criminals are smart. And what
Yep.
happens is, it's not your fault. So you want to make sure that you do something about it so they don't go somewhere else and keep doing it. You want to make
Yeah.
sure it stops. So
Uh, And I think again, it gets back to right method to the madness here. Where, follow recommendations. There's a reason. Sometimes a board member will say, Fiona, you're making it so hard. Why can't we just do this, or why can't we just do that? Again, our job is to not make your life harder. I promise you. But we're very passionate at Castle about doing it the right way and making sure the business of the association is run effectively. And sometimes that does mean it looks like there might be some roadblocks there, but they're there to make sure things are done correctly and that the association and the board doesn't get into any trouble. So if we see someone we think might be making a bad decision, they're not necessarily doing it. Listen, 99.9% of all the board members that I've worked with are fantastic, and
me
they
too.
all are trying to make the right decision for the association, and they're trying to eliminate roadblocks, which I completely applaud and respect. But we just have to look at the other side of the business coin to make sure we all stay out of jail.
Exactly. And you're doing it so right. They're running it like a business. It's not a mom and pop shop. You've got millions of dollars running through there. Collusion, one of the hardest things to uncover in an audit. People ask us all the time, are board members in collusion together? One of the hardest things to uncover. Kickbacks. They're bringing in a vendor they know. How do you know that they're not getting something under the table? Very hard to prove. And like Fiona said, I agree with her. 99% of my boards, I agree, are trying to do things right. My managers too. I don't think people are intentional, but there's always going to be that 1% or 5% that's out there that it happens, and you have to protect yourself. And overriding of controls. So people say, well, how does that happen in an association? I'll give you an example. An association has a great set of internal controls, and they're on site. They have a credit card. Board member will come in and say, you know what? We've been charging all this. Pay it now. Go call it in and make the payment. No, it has to go through our processes. I don't care. Call and make it in. Well, they're doing that because they don't want the invoice to go through the whole process to somebody see it. So they're overriding the controls. They're paying it through the phone, and it's never going through the proper controls to get paid. That happens a lot when people are trying to do something that they don't want other people to see.
Yeah,
Never let override of controls. Fiona brought it up. There's a reason, to our madness, because we want to make sure we have things in control.
yeah. Nicole, we have a bunch of questions that
Oh,
have rolling in all of a sudden, so we must have hit a
perfect.
hot area.
Yes.
I'm going to mute them
Broad.
off here. When should the treasurer receive or be notified of when the draft is actually ready?
Perfect. So as soon as you've had your interviews, all the work has been done, there will be a draft email that goes to the property manager and the board. Sometimes the board doesn't want to be included. So it gets sent to the property manager. The property manager sends it to the board. So as soon as the draft is ready, the treasurer should be receiving it from the property manager, unless you're on the email. So it comes right after all the field work is finished. If everything is sent to the auditor timely, an audit can take anywhere from 2 to 3 weeks.
And when is the audit due by statute? There's a couple of questions around
Yes,
due date and when it actually has to be available per
great
Florida
question.
law.
So the statute states it needs to be done by 90 days after year end, 120 days to the unit owner. So the audit is really due April 30th. Um, you could have the draft issued to you April 20th, get it approved, and it's finalized by the 30th. The 31st date, March, I don't know where that came from because that has no play into anything with the statutes. DPBR will only look at April 30th. So that's crucial. That's the deadline. Now, if your document states something different, some documents have February 28th, some have March 1st, which is unusual. That would actually take play. You would actually be required. I have one that their audit is due by February 28th. It's very
Wow.
hard to beat that deadline.
Yeah.
It's a lot of pressure, but they're trying to get their documents changed, but it's required. So
And
that's a
again, we're talking about associations that have a fiscal year that end in December. We do have
correct.
some that end in March, so you would just apply, right?
Yes,
Apply the math, yeah.
correct. So if you're March 31st, your deadline is July 31st. Everything's that 120 days. Turnover audit's different. Turnover audit is 90 days. So you
Okay,
need
good
to,
to know. And we were chatting earlier about a bill sitting on the governor's desk that may extend the
yes.
date. Is that correct? I heard that
So
correctly?
we have been informed that through this legislation that they have potentially passed that the deadline's going to be June 30th. It's on his desk right now. It has not been signed yet. We're hoping that it will be because myself and some other firms that are a part of the CIRA, Common Interest Realty Associations for the FICPA, Florida Institute of Certified Public Accountants, have been pushing for this because of the fact that the deadline is very hard to meet with all the associations that need audits. Firms are very overwhelmed. They're extending it. So we're hoping it passes. We should know
Great.
soon.
Yep. Perfect.
Who's responsible? The first people that are responsible for an audit and your association is the board of directors. I've heard too many times when we ask questions, they'll say, oh no, the management company is responsible for that. No, the ultimate people board of governance is the board of directors, then it's management, and then it's personnel. Very important to know that you want to take responsibility as the board of directors and know everything that's going on. This just highlights it over. The independent auditor only gains an understanding of the internal controls. They are not responsible for it and they do not issue an opinion. I brought that up earlier. Very important to know that. Some control activities, do's and don'ts in an audit, what we're looking at. The approvals, who's approving the invoices. Authorizations, who's authorized to sign for that. We also want to see the signature cards. Who at the bank is authorized to sign? Very important. It should be certain, it should only be officers. It shouldn't be all of the board of directors. There's too many people and make sure they're updated yearly. We had a situation for an association. They had somebody sign for the CDs. The CDs were sitting there. We took over an audit and said, have you guys talked to the bank? They're sitting on your books. They went there and said, the board member that signed for it had passed away and they weren't able to get any of the information. So it took a long legal process to be able to get that money. Verifications, reconciliations, who's reconciling your banks, different than actually who's signing the checks, segregation of duties, and then performance reviews for your employees. Now, I know with the management company, and I can't stress this enough. I know as an auditor, you're probably going to say, because I look at this as high risk, the most high risk area is payroll. And when you have your own employees, it is such high risk. I'll tell you why. You know everything about human resources. You know everything about health insurance. You know everything with the IRS, W-2s, I-9s. It is so much work to have employees to make sure you're abiding by standards, that you don't get sued, that you haven't done something correctly. I can't stress enough outsourcing payroll, either through
Yeah,
a management company or through ADP, and it takes
yeah.
it off the association. Fiano, do you have the same issues with that?
We We do. I see it a lot when we're chatting with potential new clients. We do have some hybrid associations, even at Castle, where part of the team is Castle and part of the team is not. And we always say you have to use a third party. Don't go it alone. Don't have people directly employed by the association because, to your point, there's just way too much in today's environment. Oh my gosh.
Yes,
Um, and the more employees, there's just so much out there right now. It just not worth the risk. And
it's
if
not.
you're using an ADP or whoever it might be, that third party, there's different levels that you can go with, and I'd be happy to answer questions for anybody on that, separately. But for sure, don't go it alone. It's just not worth it.
It's not. We're working on a case right now, an association we picked up, and they got a letter from the IRS. The W-2s 4 years ago were not filed. Their civil penalty, $64,000. And they said, we didn't even know they were self-managed, that nobody filed them. And I said, it
Right?
doesn't matter to the IRS.
Yeah.
It's the association's responsibility. So I agree with you. The more I see associations, the more you should be outsourcing that. Key issues for associations: segregation of duties, lack of resources. They'll say, well, we don't have the resources to hire all these people. You don't have to hire all those people. Hire a management company. Get a few people that you have segregation of duties, that you have low risk. Trust environment. Do the people you work for you trust? Are you getting background checks on your employees if you have employees that are on site? Knowledge of internal controls, compliance of Florida statutes. Board members are responsible for that when we interview you. That's why you're required to take this 4-hour certification to make sure you know you're in compliance. And then the AU 260 letter I talked about earlier, that preliminary letter, make sure you're reading that so you know what the auditor is looking at when they're actually doing the audit. Here's just some specific internal controls that we look at really quickly. 2 signatures on checks, even if they're electronic signatures, great. Make sure that no rubber stamps. I still see rubber stamps. I'm amazed that they still exist. um, Question unusual items. If you're getting the monthly financial statements from your management company or somebody and something doesn't look right, question it. Limit the authority. Maybe president and treasurer can sign checks, and you're limiting the authority of who can do that. Supporting documentation. Don't just authorize something that doesn't have a backup documentation. These are the things we're looking at in the audit process. Um, who's preparing the journal entries? Who's approving them? 2 staff members should be involved in wire transfers. If you are able to do online banking, do you have cyber insurance? Very important to note that. Talk to that. We look at this in the audit process. If you have payroll, who's approving it? Because there can be put in ghost employees. There can be where they're paying people that you don't even know aren't on your payroll, and do not accept cash.
Great. We have a whole bunch of questions and
Good,
we're getting close to time. So I think we should dive in. We might
good.
cover some of the slides, I think, maybe with some of
Questions
the
are great.
questions. Is it encouraged to have the association's financial committee review the draft audit as well as the board? What's your thought on that?
Excellent question. So usually the finance committee has the treasurer on the finance committee. So a lot of times they'll have the auditor meet with the finance committee and the treasurer because he's ultimately responsible. And those people have a financial background. So we discuss it, they make the changes, and then they present it to the board. So if you have that, I would absolutely have the auditor meet with the finance committee and the treasurer because they have
Yeah.
the knowledge of finance.
And I would say from management side of things, most of our associations, I would say the majority of them are doing that, right? Because the finance committee is reviewing the monthly financial package every month. Like they're highly engaged. There
Yes,
might be a couple where the finance committee isn't really doing that level, but I think there's no downside to that
me
personally, right?
either.
The more people that understand how the association works, the better, in
Yes.
my opinion. So another question is, are there penalties for not doing an audit 3 years in a row? And I think you have a slide. I'm not sure, we didn't touch on it yet, but the
We didn't
different
touch on it, but
levels of
that's a
audits
limit.
and when you have to do one depending on your revenues.
Yes, so that actually got eliminated many years ago, that every 3rd year you have to do an audit. So what the process is, if you're required to have an audit, if your income is over 500,000, You don't have to do the audit if you get the membership vote to waive it to a lower level of service, and you can do that every year. There is no longer a 3-year rule. I was kind of upset they brought that out because some associations will waive it every year. So if you get the membership vote, you can waive the audit and do a review or a compilation, but you must do one report. It is required to do something, but the revenues are 500,000 or more for the audit.
Okay. Another question is, are the objectives and goals of internal controls the same for all associations? I mean, at a high level, yes, but
High level, yes, but then it changes when different things occur. So some associations have a lot of amenities. They have golf, they have a clubhouse, they have a swimming pool that if they have different amenities, yes, there's more work to do in the internal controls, but overall internal controls for all corporations are very similar. So there's not going to be something different for this association versus another. We're just going to identify areas that are higher risk and do more work on it. But most of the internal controls are very similar.
okay. Does the board need to vote and approve funds to be invested in a CD? Amount of funds and length of time is the question.
Okay.
Um,
No, that's a great question. So first of all, I'm glad you're saying CD because you want to make sure that you're putting your money as an auditor. We look at that too in the audit process, that you're putting safeguarding those assets. We have some associations, you don't want them in high risk areas because this isn't your money, it's association money. But unless monies into a CD or put it into something making better interest, yes, you might have some tax consequences, but the board has the ability to do that. It is not a membership vote to move money into a CD or something that's making better interest. I
and
don't think
Nicole, to add to that, we get that question a lot. A board is not expected to, sit behind a computer and watch the stock market every day, right? We don't want you
exactly.
doing that, right? I think
No.
a reasonable, reliable rate of return is, where the board's head should be at, not, Bitcoin and God knows what else, right? Like,
Exactly. Thank you.
do that with your own personal funds, but not with
Correct.
the association's money. Just a reasonable rate of return, stable rate of return.
I stand behind you on that statement 100%.
Yeah, yeah. Mr. Vaughn has trained me well.
Yes.
Okay, let's see a couple more questions.
These are excellent questions.
They are. They're coming in fast and furious. Everybody realizes we're getting close to the end here.
No.
Um, why don't you keep going? I'm going to read a
Okay.
couple of these because some of them are
So
very community specific, and
go
so
right
those
ahead.
ones
Yes.
we'll probably take
Um,
offline.
so this is the audit process we talked about earlier. So the audit process of the engagements, the planning stage, the field work, the audit report, and the follow-up. So that's really the basis of your audit process. They're the very different stages, and I went through those stages. Understanding the financial statements through the audit process. So what is the purpose of the financial statements and your audit? So the main purpose is understanding your financial position. How are we? Are we running surpluses? Are we positive equity? And then the performance changes and also the end user. So a lot of your banks, if you have loans on the books, are requiring you have an audit done. And the main reason for that is if there are any changes to the financials based on GAAP, those banks want audited financial statements. So I bring up here prospective investors. You're noticing after the whole pandemic and everybody started moving to Florida, they want to see these audits. After the Surfside collapse, they want to see that is the association financially stable? Is the association in funding reserves? Do they have positive equity? The audit reflects all of that. And then the footnotes breaks out everything and tells the investor, where are you? Are you financially good? Do you running a surplus? So this is very important, the understanding of the financials and the audit for anybody that's investing in the association or you're getting a loan. So it's very important to know that. That's why a lot of associations are getting audits done versus reviews and compilations. And especially now with the new SIRS. The new SIRS, they're looking at the audit because the audit is telling everybody, did they do it? Did they get the membership vote? And did they have the report? Because the audit can't hide that. So it's very important that people are doing that. Um,
And Nicole, a lot of questions around, I'm going to summarize because a bunch of them just
Go
came
right
in
ahead.
around, the 2024 audit uh, is now past due, right?
Yes,
Theoretically. And so if we don't have our audit, what does that mean? And again, at high level, there's a bill sitting on the governor's desk, which speaks to the fact
yes,
you're not alone. Okay.
correct.
So, although, yes, the statute says it's due, if there's a bill sitting on the governor's desk to extend the timeline, that speaks volumes. But I think their questions are like, so
Yes,
are we liable? And what about our tax return, our income tax return, if we don't have our audit? Can you kind of speak to that a little
yes.
bit?
So that's a great question also to end it because we're really talking about it's late. So you're past the deadline. Few things. If you're in HOA world, there's no one to turn it into. So if you're late, there's no state that's coming in and asking, is it done? There's no issue. They're not going to fine the association because the state doesn't regulate on that. Condo world, they do. If an owner turns you into the state will come and investigate. There's potential for fines. The owner that does that is only hurting themselves because they're going to end up paying that fine. What I would be doing instead of turning it into the state is talking to the auditor. Okay, why are we late? If we turned in our work, is there a reason that it's not done? Did we turn in our work? Maybe we didn't reach out to the auditor and we don't have the information to her. As long as no one turns you into the state, there's no liability. We've been dealing with the state and saying, what is the state doing if things are late now? They said, we know that every firm is backlogged, so we are giving some leeway. If your engagement letter was signed before year end, that gives you more grace as a board because it showed that you did your due diligence to get somebody hired. And if it wasn't done, you have more defendable position to the state. If you're reaching out to an auditor now for your audit and the state came in, they'd say, well, you didn't even take the ability to get your
Right.
engagement letter signed. So
Yeah.
that I would make sure your taxes, if you had somebody got engaged to do it, you've already been extended. So you're fine. The extension was done on April 15th. They're not due until October. So you have plenty of time to file the return. The only issue that could come up is if you owed tax and your tax return wasn't done and you didn't pay in your tax, you are subject to penalties and interest because the money was due April 15th. So you want to make sure that if you do potentially owe tax, and not all associations do, last year a lot of them did because they were making a lot of interest. As long as you're extended and paid the money in, you're not going to have an issue. So if I were you, I just make sure you're in contact with your auditor and make sure, okay, did they extend me? When is the audit coming? And stay in communication with them. A lot of associations are in the same boat. I don't like saying that, but I've heard from many people. I have some that are on our waiting list now. They can't even get in with a firm. So what are they supposed to do? If the state came in, they'd say, well, we tried, but there's
Right.
nobody available. So I don't see how they can find you if there's nobody to do the work.
Yeah. Moral of the story is get that engagement letter
Yes,
early.
correct. That's the most important thing is have that signed.
That's right. Okay.
Agreed.
One last question, I think, and then I'll let you wrap it up with your
Sure.
final thoughts. Does the auditor ensure that the HOA is correctly funding reserves based on a recent reserve study? That was a great
So
question.
that's an excellent question because it comes up all the time. Remember, your auditors are not engineers. So when they put it in the audit report, it's based on a reserve study. They will tell you in the audit report if you are fully funding based on the study. But we are not engineers. So we cannot say this is fully funding. It's not. It's based on the engineering report. We only put in the audit what is actually done from the reserve study. So that's very important to know. We get questions all the time, or we get calls. Can you do our study? No, we're not engineers. We're the auditors, and we're basing it on their information.
Yes. Excellent. Okay. Well, guys, ladies and gentlemen, it's 1 o'clock, and that was the
Wow.
fastest hour of
It
accounting
was.
ever.
It was fast.
I hope everybody enjoyed it, and we tried to keep it at a fast pace. Nicole, great job. You
Thank you.
make
You
it
did
what
wonderful
could be
too.
confusing very straightforward. We got a lot of questions answered. We are going to share for the audience. We will be sending out a copy of Nicole's PowerPoint because we didn't even get through the whole thing. So
No.
there'll be more in there. So look for that in your email, and we will also be sharing a link to this actual webinar so you can go back and rewatch if you had any questions you wanted to, listen to us again, feel free.
Thank you, Fiona. You're a great moderator. That was great questions, and I really appreciate the audience. They asked excellent high-end questions.
They really did, really did. All right. Well, thank you for your time,
Thank
Nicole. We know
you.
it's a busy time of year. We appreciate you, and thanks everybody for joining. Have a great. Thank you, Shauna. Welcome, everyone.